And house auction clearance rates came through today. They've picked up to the best that we've seen in 12 months. I mean, there's a lot of people who have a lot of commentary on this, but I mean, what's City's view? Is this the end of the bust?
Well, we did quite a big piece of research about, the Australian, Sydney and Melbourne property prices especially, and it's very highly correlated to the auction clearance rates. Now, we've got the auction clearance rates definitely pick up this year, but obviously a further pickup since the coalition win, APRA, the announcements that's going to kick into force end of this month, the Reserve Bank, 1, 2, possibly 3 rate cuts. So auction clearance rates are up. CoreLogic data, the May month was the smallest fall so far this year, showing smaller and smaller falls. As a leading indicator, it does suggest that, we're likely to see the bottom of the housing market quite soon.
Well, some people will be very relieved to hear that. Liz Tian, thanks so much. Taking a closer look at the auction clearance rates, on the surface there's much to be buoyed by if you're a vendor. CoreLogic data shows the capital city clearance rate has rocketed up above 60% for the first time in a year, with Sydney then Melbourne leading. However, it's important to note that the number of properties up for sale were right down compared to this time a year ago, down 26% in Sydney, down 27% in Melbourne and off 21% in Brisbane.
Okay, so clearly we are talking auctions and few other things, of course, as we always do towards the end of the video, so stay tuned. I actually went to an auction last Saturday and here's my experience. But before we go there, let's have a look at the last auction results. So that's Saturday, 15th of June was the last Saturday, which is the auction day. So Sydney auction results according to Domain, which may or may not be exactly accurate, but they're close enough. So the clearance rate was a very healthy 71%. If we go to Melbourne, that clearance rate becomes a little bit less, I think 65%. Brisbane seems pretty low, actually 41%. Adelaide, 50%, and Canberra is, to me, surprisingly low, 44%. I have not compared to previous months or had a look at the historical data, but 44% seems a bit low. But going back to the two most important markets in the country, again, Sydney 71 and Melbourne 65%. However, in the previous segment, we saw that the actual volume of homes being up for sale in Sydney have dropped by 26%, in Melbourne 27%, in Brisbane 21%, which is a large number. This is a quarter or more, on average about quarter less properties are being sold. And I think this is because the vendors know full well that they cannot get what they used to be able to get prior to mid-2017, and they're hoping that if they waited out this property market route, that they might be able to pick up themselves a willing buyer and sell it into a rising market. I don't think that's going to happen, but with all this Reserve Bank cutting interest rates, that may well end up happening. And because there are fewer properties on the market, especially for auctions, I think those auctions are doing pretty well, which is why we're seeing these clearance results climbing up. And just a side note on the interest rates and central banks cutting interest rates across the world, we know that the Reserve Bank of Australia has cut the interest rates down to 1.25%, which to me is insane, and they're looking at cutting 2 or 3 more times, meaning that they could easily bring it down to 0.5%, which is insanity, which is completely burning the savers, the pensioners, also the pension funds around the world, with Federal Reserve doing exactly the same thing. Insurance companies also rely on interest rates being kind of a normal level of 5-6%, and that's not happening, so they might all go under. I personally really think that they're preparing everybody for some sort of a reset. I know you would have heard that from many channels on YouTube. Everyone's talking about some sort of crash and burn reset. I think it is going to happen. They may blame it on someone else, maybe a nation, hint, hint. Think about who they are currently really targeting. But that's way over my head, and I could only be speculating and potentially creating a fear porn. Okay, as always, I've got my little theory on this. As far as the cutting interest rates, take a look and just focus on the unemployment figure, how they're referencing unemployment in relation to the interest rates.
The Reserve Bank Governor has been on his feet today, confirming he's set to pull the trigger on another rate cut. Speaking in Adelaide, Philip Lowe said more jobs are needed and has called for Canberra to lift infrastructure spending and boost the economy.
The possibility of lower interest rates remains on the table. It's not unrealistic to expect a further reduction in the cash rate.
The Governor also added that the cuts were coming not because the economy was getting worse, but because they wanted it to get better, and all but ruled out the need for quantitative easing.
See, they're not looking to cut the interest rates because of the economy getting worse. It's just that they want the economy to get better. Obviously, this is wizardry. They're using words to manipulate your opinion and thinking, and to pretty much say what they're not thinking, so say something different. Most people would by now know that the true unemployment rate is higher than what they're showing us. So the unemployment rate, as they're showing us from Australian Bureau of Statistics, is the actual one is much higher than the one being shown. And I'll actually, in very easy terms, explain how it is. It's not that they are looking at the unemployment rate, calculating it, and it turns out to be 10%, and they just cut it by half, and they say, they're lying to us, it's 5%. It's not. According to their calculation, but the calculation is the problem, and also what actually happens out there when you go and claim an unemployment benefit. So let's see what the unemployment rate actually is. So in mid last year, 2018, it was 5.3%, and then it went down to 5%, 5.1, then 5.5. 5% in January 2019. So the lowest it's ever been was February 2019 at 4.9, and then it was climbing up to March 5.1, April 5.2, May 5.2. So they kind of looking at it and they're saying, it's rising, we would like it a bit lower. Now, if you are to go and claim for unemployment benefit, you are much better off going into the Centrelink, and this is obviously not an advice of any kind, but if you went to Centrelink and you actually involved in some sort of a short-term, really not very productive course at TAFE, you might be able to get a different allowance. I don't know the names because I haven't attempted to claim any for a long time, but I do know I spoke to someone who did, but again, I didn't remember the names. So instead of going in there and saying I'm unemployed, you can say, look, I would like this allowance, I would like to claim it, I would like to get money for studying. So there are courses that are qualified for studying, let's call it studying allowance. And these courses may be as short as 1 or 2 nights a week. So you don't have to be looking for work, A, and B, you get more money by being studying and getting some sort of benefit from the government, as opposed to being qualified as unemployed. They then pushing you to look for like 6 jobs a day or some ridiculous amount, and jobs that you don't want to do, you're not qualified to do, you have to be looking, or they'll cut your allowance, and that allowance is smaller than what the study allowance is. So again, if you were truly unemployed, you'd be better off to enroll in a course, and you'd have to do something like that at TAFE, at least for 6 months, buys you 6 months, and then you can do another one. And I'm not sure how long you can do it for, but in any case, this is how they manipulate the rate. So those people that are truly unemployed and are going to TAFE course and attending a TAFE course maybe 2 nights a week are not classified as unemployed, where the other ones are unemployed. So because they don't encourage you to actually be on an unemployment rate, and they encourage you to be on a study allowance, you're going to be, and more people will go on to study allowance, not being counted towards this unemployment rate. So this really boils down to that, is that if you really are on unemployment rate, that means you really are in a hopeless situation where there are no TAFE or educational institutions where you can involve, or you're just not interested. You just want to get an unemployment rate. But again, you'll have to be looking for, like, I don't know, crazy amount of jobs and applying and calling and providing the evidence back to the Centrelink that you are looking for these jobs. So this is how they make it look small. And another way that most people know in any case is that if you are working 2 hours a week, you are not deemed unemployed. You are working. That's called underemployment, and that figure has gone through the roof. Underemployment, by the way, everybody knows is gone through the roof, but everyone looks at this unemployment rate. So why are they panicking when the unemployment rate is 5.2%, when we know that unemployment rate has been much higher in the past? Like in the early 90s, yes, there was a recession, but it was pushing over 11%. It was around 6 to 6.5% between about 2014-15. Why is it so dangerous that it's now like pretty much close to the very bottom ever, yet they are panicking about it? Again, because they don't believe in that number themselves. And finally, like I said, last Saturday I actually went to one of the auctions near my work. I had to work on Saturday, so I was able to duck out quickly and watch it. It was in Denniston West in New South Wales, sold for $1.43 million. I can't say I'm a big fan of auctions. There's a lot of pressure on vendor and obviously buyers as well to get the home that they've done all this research on and done all the inspections and already spent all the money in advance. It is not my cup of tea. I'm not saying I won't ever buy anything at the auction, but I wish they didn't have auctions. But hey, it's a free market, so why not? A special thanks and shout out to Chris, who was the real estate agent there. Very professional, courteous and friendly, and most importantly, obviously, the subscriber of my channel, he says. So thank you, Chris, and well done on the auction result. I think that's a very good price. The buyers seem to be happy, and I'm sure the vendor is even happier than that. Okay, that'll do for this video. Thank you everyone, and take care.